In this video, we're going to be talking about how to start a dividend portfolio from scratch, and I'm going to give you guys some examples of what I've been doing recently and sort of how I've been starting a dividend portfolio from scratch, and just kind of my thought process of what I'm doing, and just some tips and tricks of things to consider, and maybe some things you should be worrying about, and maybe some other things you should not be worrying about too much in the beginning. Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik. If you are new here, I make videos about personal finance, investing, the stock market. Most of my individual stock investments are with dividend stocks, so that's what I enjoy talking about and talk about the most. So if you do enjoy that kind of information, make sure to subscribe to the channel so you don't miss out on any of the future videos, and also drop a like on this video as that helps other people see the videos and gain some knowledge that I may have to share. So with that out of the way, we will get right into this video about dividend investing. So I think I've mentioned it a time or two before, but if this is news to you, I've been building up a dividend portfolio for myself over the past year and a half. But more recently, just at the start of 2021, I started working on a dividend portfolio for my brother. So he's been investing in various index funds and mutual funds, just kind of passively. He doesn't really pay attention to it a whole lot. And then over last summer, he got a little bit interested. One of his roommates was in finance, I think, and he was, telling him the hot trades of the day and all that kind of stuff. And he tried that, and I think he made a little bit of money, but over time he just kind of stopped doing it. But he wanted to work on a little bit of a dividend portfolio. He saw kind of what I was doing and thought that sounded good. So I'm basically helping him out and making some buys, and then just talking to him about why I'm doing that and kind of getting him into the swing of things, and then eventually I think he's gonna manage it himself. But that's why I've been building up a new dividend portfolio, and it's kind of given me a different outlook because I'm starting with a little bit more money than I had when I started, so it's given me a little bit of a different strategy in this case, so I want to talk about that. So one of the biggest things that a lot of people talk about when getting into investing is diversifying, which is definitely really important. But I think when you're starting out a portfolio, you don't really need to worry about that all too much, as long as you're not like throwing all of your money into the market right at once, as long as you're kind of adding over time and looking for deals. So my basic strategy was that I was wanting to add some good quality stocks to the portfolio, and eventually over time get diversified into different sectors and stuff like that in multiple stocks. But initially I just wanted to pay attention and find some stocks that were at a good deal and purchase those at a good deal, and focus more on getting a good valuation for the company initially, rather than diversifying. And then later on, we have started diversifying a little bit and focusing on that, and maybe looking and saying, well, we don't have a company from this sector, so here's a few companies we're looking at, and then if they ever get to a good valuation, I'll make some buys on that company. So I'll show you guys some examples of what I've done and all the particular holdings in his portfolio. Alright, so looking at the positions here, Southern Company, he owns about 0.68 shares, which is 2% of the portfolio right now. That's the smallest holding, which is actually pretty funny because Southern Company is one of my favorite companies and it's one of my biggest holdings, but I just don't feel like it's at a fantastic price right now. So I probably will be adding to it if it does dip, but right now we're just leaving it where it is. Then JP Morgan owns about 0.32 shares. I started buying it right when it was around $125 a share, I think, and then it just kind of skyrocketed from there real quickly, so that's about 2.5% of the portfolio. Coca-Cola, 1.1 shares, which is about 2.76% of the portfolio. AT&T, 2.03 shares, is about 3% of the portfolio. Microsoft, 0.31 shares, which is about 3.57% of the portfolio. Air Products and Chemicals, about 0.27 shares, which is about 3.7% of the portfolio. And so far, if you've been following me, you know that so far all the companies I've listed, I do own in my dividend portfolio, but that's where that changes. I bought some McDonald's in his account, which I do not own in my dividend portfolio. So he owns about 0.36 shares, which is 3.75%. Then he owns some Visa, which I do not own in my dividend portfolio, but I do have it in another growth portfolio that I've talked about before. So he's about 0.35 shares, which is about 3.85%. Then some Pfizer, about 2.81 shares, which is about 4.84%. AbbVie, about almost 1 share, 0.95 shares, which is about 5.1% of the portfolio. I want to increase the AbbVie position, I think, because I think it's a great company, and I think it's at a pretty good deal right now, even though it may not seem just by looking at the stock price, but I think you have to consider many other things other than how much the stock price has gone up recently. So Johnson & Johnson, about 0.77 shares, which is about 6% of the portfolio. Realty Income, about 2.2 shares, which is 6.8% of the portfolio. Procter & Gamble, 7% of the portfolio at about 1.1 shares. NextEra Energy, 2.32 shares, about 8.6% of the portfolio. Apple, 2 shares. These 2 shares he actually owned since sometime in the fall last year. I didn't buy these. This was basically the only thing in his account when I started. So far I've just left those, and I may be adding to them if Apple continues to drop, but right now I think I'm good, and it is about 12% of the portfolio. And then Pepsi, with 1.84 shares, is 12% of the portfolio as well. And like I said, cash, about $246 of cash there, which is about 12%. So Pepsi and Procter & Gamble, if you look here, are all in the consumer staples sector, and you can see from this graph here that consumer staples is the biggest sector, I think, that is owned in this portfolio, about 22%. And the reason for that is those companies just over the past month or two have really been on some good discounts. I think, Procter & Gamble and Pepsi were both in the 120s, which is fairly good for them, I think. So I was just kind of loading up on them a little bit, and that is what happened there. So I have to say the one thing I'm really liking about his portfolio so far, more so than mine, is that the average 3-year CAGR we can see here is 9.45%, which is absolutely incredible. That's most likely not sustainable over the long term to keep that CAGR up, but I think that's good to see, at least right now, having that CAGR. So like I was saying earlier, there's still some sectors that I don't own any of. So you can see we have utilities, financials, consumer staples, communication, infotech, materials, consumer discretionary, healthcare, and real estate. So that's 9 sectors. There are 11 sectors. The 2 missing sectors there are energy and industrial. So the one that I'm really not too concerned about adding is energy. If I do think I see some good deals, I'll probably pick some up, but not really too concerned about that at the moment. But the one I do want to add is industrials. I think that's a fantastic sector. I actually made a video about Caterpillar stock recently, so if you want to check that out, I'll leave a link to it. But that's one of the great industrials companies that I like. I do want to add some industrials companies at some point, and one of the ones I'm looking at, and one of the ways I try to figure out which companies I want to add, I have this little watch list here. The different sectors, the companies that are on the list in those sectors, the price, and then the percent change over the day of those companies. So in the industrial sector, the one that I'm looking at recently has been Lockheed Martin. So I haven't done a ton of research on this one, but it's, in my opinion, at a fairly good price right now. And I think it's one that I probably want to add in the future to this portfolio. So I'm going to do a little bit more research on it and try to figure out what the best price is. But at some point I may be adding that one in the industrial sector. Just these other companies like Caterpillar and 3M are just at fairly rich valuations right now, so I'm not sure if I want to buy in there. Lockheed Martin and some of those companies in the defense and aerospace industries have definitely historically traded at lower valuations than some of the other industrials companies, but right now I think Lockheed Martin is still at a pretty good deal. So we're going to take a deeper look at that and try to figure that out and maybe buy some more. So one of the things I would recommend, especially if you're brand new to investing or pretty new to investing in individual stocks or dividend stocks, the one thing I would say is just try to take it slow. Don't try to rush in too quickly into anything. Obviously, if you see a good deal and you have conviction in that deal, you have to strike because that deal probably isn't going to last very long. So that's another aspect of it, is that you kind of have to be able to be patient and not too excited, but at the same time, when you see something, you got to go for it. And as long as you have conviction in that play, then you can go for it and be confident in what you're doing. So especially for beginners, when you're new, just kind of try to take it slow. And even I've had about a year experience investing, and I'm just trying to take it slow and not be too aggressive building up this portfolio. I've definitely seen some good deals and taken those, but at the same time, I've been cautious and not really deploying all the capital at once, and just kind of being patient. I think is really important. Patience is one of the most important things, I think, when investing, and sometimes it feels like you're not doing anything because you're just sitting there, but you have to be patient and wait for the right opportunities. So the one thing I do want to say is, if you guys think I'm saying something wrong or saying something incorrect that doesn't exactly make sense to you, definitely let me know, because I may be a little bit more experienced with investing than my brother or someone who's brand new, but I'm still, in the grand scheme of things, pretty new. I've only been investing about a year and a few months, and into dividend stocks, it's really been only a year. So let me know if you would do something differently than I'm doing, and if you are a beginner, let me know any questions you might have about dividend investing, and I will try to answer them to the best of my knowledge. So with that being said, I will see you guys in the next one.